Hey everybody, how's it going? Hopefully you're having a nice weekend. It's been a little over a year since I've done a YouTube video like this, so just bear with me. Might be a bit rusty. Just as a reminder, don't take anything I say as investment research. This is just me rambling, trying to share some things that I find interesting. So be sure to do your own research before buying or selling. Let's start off with the big picture. This is the SPY S&P 500 ETF monthly chart. And I love this chart because it just shows to me the benefits of being a more active versus passive slash buy and hold investor. You could see here from 2000 to 2013, the market went absolutely nowhere. So if you were buying and holding, you had these huge ups and downs, down 50%, up 100, down 50, up another 100, just to get you back to where you started. So to me, that doesn't seem like a viable strategy. And it shows to me the importance of having some risk management process in place where you can avoid these big drawdowns and still catch the bulk of these nice trend moves. So I just love this chart as a reminder and a visual of that. Obviously, we've had a great run here over the years. Right now, you can see we're really close to those all-time highs and those highs from earlier this year in the SPY. So it'll be interesting to see how that plays out. This is the 14 period RSI momentum indicator. You can see momentum's been coming down. Will that mean anything ultimately? We'll have to see. Time will tell. But it'll be really interesting in the next couple weeks to see how we respond as we approach those all-time highs. We got back there awfully quick. I still can't believe that the power of this rally we've had since March. So this seems like a logical place, maybe where it stalls out and regroups, but who knows? We'll see. This chart is really interesting to me. This is the from multiple.com. This is the price sales ratio. I like to look at price sales ratio versus price earnings because sales are a little bit harder to, quote unquote, manipulate. They are what they are. But bottom line is here, the median's about 1.5. We're at 2.4. This is based on sales data through March, which in my mind, I think it'll probably come down a bit, which would make this ratio even higher when it's updated if prices stay consistent. But bottom line, what this says is we're about 60% over the median, from the last, going back to, where does it go back to, like 2000. So the market is very fairly valued, if you want to call it that. Obviously, I trade based on price, and if I would trade based on this data, I wouldn't have been in the market for the last 5 years because it's been like that for a long time. So you don't want to fight the trend of price, but just something interesting to point out. And again, to highlight how important it is to have risk management in process, because if this starts coming back down, if it's decided that, hey, this is important, things are overvalued, and they start coming back down, price action will tell you when to get out, but you want to make sure you have some kind of risk management process in place. Here's the daily chart of the SPY, and you can see here I use a lot of volume by price. I anchor it in Trend Spider usually to an important high or low. So it's anchored here to the March lows. You can see this big volume bar. So tons of shares traded. This is around 325. Those are the highs that I mentioned there from February, getting awfully close. So maybe if we take a little break here and just come back down to this 325 area, for me, I would definitely use that if price starts respecting, this level, this former high here back in May, close to where we were here in end of June. If price starts bouncing off of that again, that would be a really nice spot to get long that you can manage risk. So that's the daily look. Here's Apple. I posted this chart on Twitter and StockTwits yesterday. I found it interesting that Apple is now farther extended from its 200-week moving average than it's been since 2012. So just an incredible run. It just shows the strength of the run we've had from March. Am I saying that this run is over and it's going to collapse? Absolutely not. But I mean, logically, I have to think at some point it has to take a break. And what that means for the indexes is, this is the biggest weighting at about 6.5% of the S&P, 13.4% of the Nasdaq 100. So if this name and some of those other big FANG names start kind of taking a break, even 5-10% pullback, they're going to have a pretty big impact on the indexes. So you don't have to trade the indexes, but a lot of people like myself, especially in work retirement funds and things, it's a lot of index funds. So some of these larger names have such a big impact on them. So just something to be aware of here, and that I found interesting with Apple. And this is from Koifin.com, a great source of, you can do some research on financial ratios and things like that. But this is Apple Um, the price to revenues, trailing 12 months and forward 12 months, we're at 6.9 and 6.4 currently. Look where we were in 2015. We're over double that. So Apple is just taken off in its multiples. Price earnings trailing 12 months is trading at 33.7 PE. It used to be around 13 to 20%. So just really, 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 again, quote unquote, fairly valuation here for Apple. So something just to be aware of. Again, use price action to tell you when to get out. And another thing I want to point out here is silver. This is a chart that I've been posting on and off for the last couple months. Just a beautiful monthly base. You can see all that volume here. I was been long silver since May. Still long mostly. I trimmed a little bit last week, but this is something I want to point out with, momentum overbought. You could see it entered overbought. This is the monthly 14 period RSI. It got overbought here in September 2010. Then over the next 7 months, it went up another 126%. So why do I point this out? Just to show how important momentum can be and how strong it can be. And just because something's extended and overbought, it might still have a lot of legs left. So you don't want to use simply being overbought or oversold as buy and sell signals, because this is a great example here of how strength can continue to be strong. And that's what we've really seen in the market since March as well. There's a lot of data that would suggest that the markets have ran too far, too fast, and I wouldn't argue with that, but I would argue even less with price. I mean, it is what it is, and if price gains momentum one way or the other, it can continue for a lot longer, and it can be a lot stronger than you think. So we've seen that with silver here, as we just entered overbought on this monthly 14-period RSI last month. So kind of a cool chart there, just something I wanted to point out. So if you're not familiar with how I look at the markets, this is a perfect example of kind of what I look for in trades. And this is Tupperware stock. And I talked quite a bit about this earlier in the year. It just trades so orderly. You can see these yellow areas, the former high here turns into the new low. Former high turns into the new low. And this is when I traded a couple times successfully earlier in the years, just using these simple horizontal levels. And you'll see this time and time again in different charts. But this is just such a clean example I wanted to point out. And I should also point out that this last huge move I did not participate in, unfortunately. That was the biggest move here. It came back to this area here and then just had that huge run. I missed out on that. I got these little ones down here, nice trades, but just wanted to point this out, a great example that I think could go in a technical analysis textbook here of support and resistance. So that's what I look for when I'm looking at charts. All right, let's get into the good stuff. So XLF, a lot of financial charts are showing up on my scans and looking really good. When that tends to happen, I'll look at the ETF, and if it looks similar to a lot of charts that I like to look of, like, I was looking at Citigroup, JP Morgan look really nice. They're pretty big weightings in the XLF. So I look at the XLF chart and it looks pretty similar. So when that's the case, I tend to go with the ETF because it eliminates some of that company specific risk. And those big banks have reported earnings, but if there's other components you're trading, you don't have to worry as much about the earnings dates and things like that. So I am long XLF via calls, and I did buy FAS, the leveraged 3X financials last week. So we'll see how it goes. But to point out here, I'd be aware of this 26-ish area. This is the 200-day moving average. You could see it acted as resistance up there. So there's a little volume gap here. You can see that strong volume base here. You can see all those big bars. So really nice look. If it gets, under last week's lows, I don't think I'd want to be long this, but for now it looks really good for a run, maybe to that 26-ish area. That's when I'd kind of reevaluate, probably take some off the table, not all of it, but I'd book some gains there if we're fortunate enough to get there. But I really like the look of this. We'll see if we get some follow through next week after that nice day on Friday. So let's look at some more charts quickly that I'm interested in next week. FCX, you can see here right around 14. Just a nice area here was resistance here and here. Finally broke through it, got up a little bit, came back, kind of bounced off a little bit Friday. So this is one that's high on my radar for next week. Really nice entry opportunity here in my view over this yellow line. EBTC, I got a little cute with this one and entered it last week. I had a really tight stop. I got stopped out, but Friday had a nice looking candle there. A big volume base again off of those March lows. I love how you can anchor it there in Trend Spider from different points. But if it starts bouncing, if it starts getting up, $32 and staying there, this one looks like a really good risk reward. I would put my stop, maybe under Thursday or Friday's lows, but one that's on my radar for next week. Another cool thing I wanted to point out in TrendSpider, I'll go back to XLF real quick, is this has added a whole new dynamic to my trading. Being able to add this the Alpha Trends anchored VWAP. You can see here I have it automatically anchored to these various points, and it's really helpful when scanning through. I find most of my trades by eyeballing charts. I have some scans that kick out a lot of results, then I'll go through the list and kind of eyeball them. But it's added a whole new dynamic to be able to eyeball these charts with these automatically anchored to these various points. Lowest low, highest high year to date, some of the key points. It's just really a cool visual, and it's something that before the automatic anchoring, you'd have to go and click and anchor them, and it's just really a big time saver, and it's really pointed out some neat opportunities. So I just wanted to point that out to you. So HST, a lot of these hotel names are at interesting spots. Obviously, they're still in longer term downtrends for sure, but this is HST. You can see again this big volume base. Friday had a nice day, so this is one I'll be watching next week, along with a lot of other similar names, to see if we get a tradable move here. This isn't one I necessarily just buy for the long run, but if we have a tradable spot here and the risk reward's good, maybe here we get to the 200-day around 1350 or so. That's definitely worthwhile to evaluate as a trade. So I wanted to point that out. Had some strong days Friday in these names, so we'll see if they continue into next week. Jets. This is the ETF. A lot of big airlines here. But we have this really nice area here, around 1550 or so, that was resistance. Remember that Tupperware example, resistance turned into support. Now we have a tradable spot here. So we'll see what happens next week. But I really like this ETF, and you can have, if it gets back up to those highs there around $20, that's a pretty big move for a trade. And that's an area where I'd look to take some off the table, or at least relook at it and see if I still want to be long around that area. But for now, above this yellow spot looks like a nice risk reward buy. Nike, just a really nice looking chart here, nice breakout here out of this kind of triangle type pattern. If I drew a line down there, we do have this spot here, just a couple dollars higher to be aware of. That's the highs from earlier this year, and it touched there in May. So just to be aware of that spot. When looking at charts like this, you can enter below that and use here, maybe that's from last Wednesday, maybe use that just below that as a stop. But just be aware of that high right there. And obviously, that can also be an entry trigger as well if it breaks through that yellow, and you can put your stop slightly under that. So really nice looking chart here, Nike. MIK, very similar to Nike. You get the idea. Just be aware of those old highs there, see if there's any demand that comes into question. But a really nice looking chart, big volume base, breaking out of a kind of triangle type pattern. So a nice look there, one that's on my radar for next week. This is a weekly chart, PANW. I am long this name, and I really like the looks of this chart. If you look at it on a daily, it's a really nice look. But you can see above this yellow, that's a spot that acted as resistance all these times, and now we're through it. So above that, this one looks like a no-brainer long to me at this point. Watch out for earnings. I haven't checked that. I think they're coming up. I think we have a couple weeks, but I could be wrong, so check me on that. But this one looks really good. Big. This one, nice little. It's had a huge run from the March lows, like a lot of things. It was about $10 up to 40, and it looks like it's not quite ready to be done yet. We have this nice buyable area here. Again, big volume base, trading right around this $45 level. So just something I'm watching. I don't not crazy about that action on Friday, but if we kind of pull back a little bit and start moving back up, this is one that's on my list for a long trade. DIOD, this one, this area, $52 or so, has acted as resistance all year, and we're just getting really tight trading right underneath it. So if it decides to break above that level, this is one I would definitely consider as a long trade. Again, with the stop a little under the yellow, if we broke out this week, my stop would probably be, under Friday's lows or somewhere around that spot. So nice risk reward tradable spot there in DIOD. SpaceX, this one, I was long a little bit. Earlier this year, we had this nice breakout from here. But now we've had a really big pullback. But look where we're coming back to. If I draw a trend line here from the March low, we're right in that area. Some volume supporting the price here potentially, and this alpha trends anchored VWAP from the March lows is also coming into play right around this spot. So this say 1750 to 1850. This is just a kind of a level to watch. And if price starts bouncing off of this level, it would be a nice spot in my mind to take a stab at a long trade and manage your risk from there. So those are just some charts I wanted to point out. Hopefully you find this helpful. Again, I'll try to do this more regularly. It's been a long time, so I appreciate you tuning in, and feel free to reach out if you have any questions. Thank you. Have a good one.